Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm your host, Tshepo, Modiba. Today in studio with me, Langa Madonko from Africa's Strategic Impact Advisors, and we're focusing specifically on Ethiopia. And drilling down into the economy and trying to understand how it works. Langa, a fascinating economy here. If I'm not mistaken, the second largest country by way of population in the continent. You wouldn't think that, would you?
No, you wouldn't. You'd figure that maybe your DRCs are bigger. And I think it's mostly based on how Ethiopia has been what many people have called a quiet economy. Nobody externally really knew what was going on because of the whole communist setup of the society. And now that they're starting to come out of that cocoon into a more democratic system, that's where now we're starting to hear about Ethiopia.
Some interesting nuances about the economy as a whole. They don't have a stock market?
No, they don't. I think there's a lot of interesting aspects about Ethiopia. Like, for example, they also don't have any foreign-owned banks operating in the country. The telecoms industry is wholly government-controlled. And the energy sector, again, is another one that is government-controlled, but is starting to see a little bit of liberalization there.
But strangely, this is the country that brought us the first commodity exchange in the continent. Again, some really interesting stats and numbers coming out. I actually think Ethiopia is the largest country by way of population that doesn't have a stock exchange in the world.
Yes, it is. And I think that's been one of the dilemmas of many African countries, that in many facets we go forward and then find ourselves going backwards. But now Ethiopia is going again in the right direction. All the fundamentals are there in terms of the population size, in terms of a drive by the national government to promote development of infrastructure. One of the reasons why they choose to control the telecoms sector is that they've given, and which they've largely managed to achieve, is that they use the revenue generated from that space to lay railways, roads, to build airports. And after the process where they've gone through that whole system is where we'll start to probably, hopefully see a situation whereby they move that sector away from total government control.
Now, realistically, or I guess the reality of it is that this is actually one of the continent's fastest growing economies.
Economists estimate that it will continue to grow, averaging out between now and 2025 consistently at about 7%. From time to time, it climbs all the way to about 11% growth, and then it comes back down to about 8%. And again, like has been the general African story, you're starting to hear stories of natural gas reserves. That has a big influence on how the energy space is going to shape up and look like going forward.
Right. So from an investment perspective, investors are either tapping into businesses that are doing things in Ethiopia, the likes of Dangote Cement, the likes of PPC, or alternatively you're waiting for a time where in a couple of years' time a stock exchange is formed and you get to participate in Ethiopian businesses.
Yeah, I think right now everybody should be looking at Ethiopia without a stock exchange. I think you need to be looking at the opportunity to go in and start doing business, particularly in businesses that are reliant on the numbers. I mean, if you are in a space like FMCG, if you're in a place like energy, as it becomes less and less controlled by the government and becomes more open to foreign investment, you are at an advantage to move into that space as early as possible. Again, one of the things that the government has always promoted and is continuing to promote is a situation where anybody who is coming in is partnering with a local entity to deliver the services and products to the economy. And that is also advantageous for you as an investor if you're going into the country, because it gives you additional protection from more of the internal forces, if I can put it that way.
Now, one of the sectors that we were speaking about before the show is breweries, or beverages, broader speaking. Your view on the sector as a whole and the opportunities going forward presented by it?
I think Ethiopia, generally the capacity to consume fast FMCG products is growing.
Driven by this big economy.
Driven by this big economy,
population.
by the big population, but also driven by the fact that people have improved their earning capacity.
Right.
They have more disposable income, slowly rising. I think last year's numbers put it at about $510 US per capita per GDP capita for each individual. And now what has happened is also with the introduction of new brands into the space, you are seeing a situation where the price of beverages is coming down, but the volumes consumed are going up. And that takes us from a position where in 2013 we're talking about the sector being worth $690 million US, and last year it had grown to about $785 million US. So if it continues to grow at that rate, which it seems to be doing, we're looking at a plus $1 billion industry before we get to the close of this year.
Now, in terms of the type of beverages that are performing particularly well, are we seeing, in essence, a distribution model where some foreign producers are coming into the economy and distributing their produce, or is it really locally produced beverages that the broader population is consuming?
Because Ethiopia has predominantly been an agricultural economy. All the guys who are coming into the country are saying, look, we have our brands that we would like to bring from outside the country, but they are finding that it is more advantageous for them to brew locally.
Right.
So you have one brand of beer, St. George's, which is the oldest beer in Ethiopia. It was bought over by Castel from France in 1998. It was the largest, most distributed beverage in the whole country. And now it sits still relatively high up, is number one, but you're looking at a number of about 31% in terms of market share. That's because now you've got everybody from Heineken coming into the country and starting to establish factories or taking over existing breweries and then increasing the volumes, lowering the prices, like I said, and then there's a greater consumption.
So in terms of the underlying dynamics, we expect stuff like manufacturing to be benefiting quite nicely from this foreign direct investment.
Yeah, manufacturing will benefit more now, as we particularly, like I said, as it's an issue of the regulation framework that has been in existence in Ethiopia. As it becomes more relaxed, you get a situation where it will be a main beneficiary of the foreign direct investment. And of course, the beverage sector will probably be in the lead. And then secondly will be your food process, your agro-food processing, which I think last year had an average year-on-year market size of about 430. Just slightly behind where everybody estimates that it should be, but those are functions of the cyclical climate conditions. So, yeah.
So, if I'm not mistaken, a big chunk of Ethiopia imports quite a bit of their produce, be it from agriculture side to stuff like bottles for the distribution. Are we likely to see that changing over time as this economy grows and thrives?
I think it has started to change, particularly in the bottling space. You get the company Juniper has already gone in there and they've set up a plant where they're going to be manufacturing. They're estimating that they're going to be able, in the last year, the rough estimate in terms of the number of bottles that they're able to put out was 250 million bottles. This year they're estimating that they'll be able to double that number. It might still not be enough to meet the demand in terms of all the breweries and all the beverage makers that are locally in the country, but because of the low cost of labor and because the raw material is available locally, it gives a bigger opportunity for people who are more, for lack of a better term, adventurous and are willing to come into the local Ethiopian market and establish themselves. Most preferably slightly outside Addis Ababa, because that's a little bit more expensive. But the general infrastructure to get you from cities that are just outlying in terms of the capital city is good enough, fair enough compared to anywhere else in Africa, and it makes it worthwhile to be in the country. Speaking to other products, like for example, the production of agro implements. Right. Again, there are some entities that are coming out of Europe that are looking into manufacturing, or in the first phases, assembly on the ground. Because again, one of the things that the government has done really well, but not so well, has been the fact that it has managed to restrict competition in terms of businesses that would compete with local entities, right, through regulation, but it has tried to promote the development of technology through partnerships with external entities. So an example is, let's say you make tractors. They will say, we understand that you make tractors, but teach someone locally here how to assemble your tractors. And then 5 years down the line, teach them how to make a certain percentage of the tractor.
So the long-term idea is for skills transfer locally.
Exactly.
Now, this protectionism that exists currently, are we likely to see that changing, easing over time, over the next couple of years?
It should be easing, because Ethiopia is really making good and big strides to try and integrate itself, firstly into the whole and larger African economy, greater participation in trade blocs across the continent, but also it's trying to get involved more in international organizations like the World Trade Organization. It aims to become a participant in the World Trade Organization in the later half of this year, and everybody sees that as a positive step in terms of how that will affect policy towards foreign direct investment.
So potentially we'll see an increase in participation from not just international firms, but also African businesses in Ethiopia, the likes of, again, Dangote and PPC continuing.
Yeah, I think it will continue, and I think we are likely to see more businesses getting on Ethiopian Airlines to go see what's happening there. I think Ethiopia holds a lot of promise, and this is actually, I think, the ideal time to be in the country and seeing the opportunities that are available on the ground and on the market.
So if we had to wrap up, we'd say we're fairly bullish about the prospects for businesses in Ethiopia.
I think we are very bullish about the prospects. We don't see a stock exchange in the next 5 to 6 years, but we definitely see hope for immense growth for anybody who's there at the right time and is willing to be a little bit patient for everything to find its footing.
Perfect. Let's leave it there. Thanks to my guest, Langa Madonko from Africa Strategic Impact Advisors. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.